some other part of recoveries would be dealt on a class which would be held most likely on 25th of January. So this would be after your assessment procedure. I think by chance it's also a good thing, because you would now be able to relate how the interests are calculated in a more accurate and in a more understandable manner. So this is a small update. Obviously you people will get an update otherwise, but today our focus would be on completion of TDS and TCS. So those who are joining now, again, I hope all you people are studying well, coping well. Before we start our today's class, any questions in relation to any of the TDS sections? You may please proceed ahead. And just in case you don't have any questions, I would request you to please attempt as a warm-up exercise, because we are meeting after a break of 3 days, the question which is on your screen. So the question which is on your screen is regarding the TDS provisions applicability. You have to examine the liability. Now, whenever such examine the liability of TDS comes, you have, these are basically 2 markers or 3 markers each. So what should your focus should be on to give a small brief of the context of that section, relate it quickly in another 2 lines, and then give a conclusion that this is the rate. Always, whenever you have to give a conclusion, please be very specific that the examiner or the paper checker do not have to look into the answer. There is your conclusion very detailedly given. A very, very good evening to Sumit, Raman, Anjali, everyone. Okay, so now let's do this as I expect the answer from you people. First is Wings Limited has paid amount of rupees 15 lakhs during the year ended 31st March 2021 to airport authorities of India towards the landing and the parking charges. You have to tell under which section the tax shall be deducted. And those who will be quoting the case laws in relation to this, I mean, kudos to each one of you. So quickly on the first part, which section the TDS would be attracted? We did discuss this in the previous class. Good, very good, Sumit. Yes, so you will obviously write it as in 194C, 1.5%. But here, one thing, students, you need to remember is that whenever we are talking about, see, this is a clear case. We know that this is a case of our Supreme Court ruling in case of Japan Airlines. And here, obviously, we will first quote it that it is not in relation to 194I, because airport authorities have to provide n number of services. Very good. N number of services, and landing and parking charges is just one of them, and that is a services which is provided, and the land use is just incidental to it. Hence 194I would not be attracted. Here 194C thus would be attracted, and since it's related to year ended 31st March 2021, it's safe to write 2%, and then in bracket may write 1.5%. Okay. Then is your Omega Limited. Now, Omega Limited, an event management company. Second part, guys. Omega Limited, an event management company, organized a concert of international artists in India. In this connection, it engaged the services of an overseas agent, Mr. John, from UK to bring artists to India. Okay. He contacted the artists and negotiated with them for performance in India in terms of the authority given by the company. He did not take part in event organized in India, the company made the payment of commission equivalent to 1 lakh to the overseas agent. So here Omega Limited is just making a commission payment to Mr. John, who is an overseas agent, just because he negotiated with the artist and basically helped in contacting them to perform in India. So now which section would be applied here for TDS? Quick, guys. Whether 194H would be applied? Sumit says 194H at 10%. Okay. Good attempt. Others? Sumit Agarwal says commission paid to non-resident agent for service than it is outside India, hence not liable for deducted. Preeti, 194H. Okay, good for all those who attempted. First of all, 194H is only for resident individuals, not only resident individual, resident persons. So Mr. John would not fall in the category of 194H. Whether he will fall in 195 or not, that is what we'll be doing today. Okay? So 195 ka crux, basically if something for a non-resident is getting taxed in India, then you have to see whether what TDS rate would be attracted. Okay? So at least for sure 194H is not there. So that's what's the point I needed to check with you. Other conclusion, we'll do it once we do 195. Okay? Next. For Ramesh, sorry. So this is the trick which you need to remember, okay? So now Ramesh gave a building on sublease to Mac Limited with effect from 1st July 2020 on a rent of rupees 20,000 per month. The company also took on hire machinery from Ramesh with effect from 1st November 2020 on hire charges of 15,000 per month. The rent of the building and hire charges of machinery for the year 2021 were credited by the company to the account of Ramesh in its books of accounts on 31st March 2021. So now Ramesh is a person who has subleased it from Mac Limited. Now think and just tell which section would be applied. Mac Limited actually has taken only, sorry. Which section, students? At 7.5% on building, 1.5% on machine rent. Very good, Sumit. Very good, Sumit Agarwal. Very, very good. Very good, Ambika. 194I, because in total it is crossing 2,40,000 to 55,000. Yes. But separately on both 1.5 and 7.5. Perfect. Clear? Had this been an Ulta case, Ramesh had taken it on lease, then what you would have seen, that first you would have seen whether Ramesh is liable to deduct TDS or not, and then you would have seen whether 194I would be attracted or not. Okay? Last, and I'm assuming with this last question, I'll be starting 194N, and I hope no one has any doubts, particularly in any section. Okay? So 2,45,000 paid to Mr. X on 1st February 2021 by Karnataka state government on compulsory acquisition of his urban land. What would be your answer if the land is agricultural land? Quick. Which section and what is the TDS rate and what is the triggering limit? All of these. Because C, J is the limit we remember, this section ka limit we tend to forget. Very, very good, Sumit. Very good. Section which is attracted here is 194 LA, but 194 LA ka threshold limit is 2,50,000 when the compensation exceeds 2,50,000. But in this case, it is 2,45,000. Hence, it would not be triggered. Please, in your answer, do not write no TDS or liability on anyone. You have to tell why it is not getting triggered. Okay, and agricultural land may, whether it's rural, whether it's urban, even if it is more than 250, on agricultural land, 194 LA is not there, but 194 IA on urban agricultural land is attracted. So please make sure that you remember this particular difference, that LA excludes both agricultural land, but IA includes urban agricultural land and excludes only rural agricultural land. Clear? Okay, so with this, I shall proceed again. Any moment you people have doubts, you can quickly ask that. Very good, Ambika, Preeti, Sumit, all of you. Good that you people are participating. Very, very good. So now we proceed to our section, which we are supposed to do is 194N. TDS on cash withdrawal. Now, these in past couple of years, some really attempts have been made first to curb cash transaction, basically to promote digital economy. Then at the same time to put restrictions or to put TDS and TCS elements or to put penalties in such cases. So one such movement towards curbing cash, or you can say towards promoting digital economy, was section 194N. TDS on cash withdrawal. Now, first of all, this is a case of cash withdrawal. So cash withdrawal will be done from either a bank account, banking company. So who will deduct the TDS in the deductor section? Please write banking company, cooperative society or cooperative bank, and post office. So when a person makes a cash withdrawal from one or more accounts maintained with either banking company, cooperative bank, post office for a value exceeding 1 crore. Exceeding 1 crore. So threshold is 1 crore. The TDS shall be deducted by them at a rate of 2% of such excess amount. So this is one section where instead of, once you trigger the threshold, instead of the whole amount, only on the excess amount the TDS would be deducted. So if the withdrawal during the year from all accounts in combined is more than 1 crore, say 1 crore 20 lakhs, so the TDS would be deducted on 20 lakhs. So the person who makes a withdrawal of cash on the accounts maintained by him would basically, the TDS would be deducted by them on such withdrawals. Now, how the bank deduct TDS, whether they give them the cash except net of TDS amount, which is not actually correct, they will make a debit in your accounts of such TDS. Now, the time. The time is obviously when you make such withdrawal at the time of payment. When the banks pay you such amount, then they will deduct the TDS. Clear? So this is clear. So on 1 crore 20 lakhs, how much would be the TDS? 20 lakhs ka 2%, which would be 40,000. They will deduct the TDS. Any doubt, students, up till now? Okay. Now here there is an amendment from 1st July 2020. So students, one more thing, do not say this section is any person who makes a withdrawal. Any person. First of all, sorry. Any person who makes a withdrawal, so being a resident, non-resident. Second thing, again, that same concept. Not only from one particular account, this limit would be triggered. One bank ke saath, if you have any number of accounts, on all those, this limit would be triggered. On all those, the limit would be triggered. Now, first, did I say what is the amendment? First, did I say the amendment is, again, to curb or to bring into tax net more of the people who do not file the return, still withdraw so much of cash. For them, this amendment came. So please note it from 1st July 2020. Again, this date you have to remember. I'll tell you why. So from 1st July 2020, any person who has not, or any recipient of the amount who is withdrawing the cash basically, who has not furnished his return of income for 3 assessment years preceding the previous year in which you are making the withdrawal, and the time limit of those filing of return has been lapsed and he has not filed the return, then in that case, instead of 2% of one on some exceeding 1 crore, the TDS would be deducted like 2% on the excess of 20 lakhs to 1 crore and 5% on excess of 1 crore. So just suppose the person who I'm talking about has not filed a return and has withdrawn a cash of 1 crore 20 lakhs during the year. So they would have deducted on the 80 lakh 2% plus on the 20 lakh 5%. This is what the TDS would be deducted. Again, I'll say this is applicable for those persons who have not filed their income tax return, where the recipient who has not filed their income tax return for 3 years for which the time has expired immediately preceding the previous year in which the withdrawal is made. So if I give an example, we're talking about previous year 2021, right? And you're making a withdrawal in previous year 2021. The time limit for previous year 1920 is still there, right? Now it is not there, but it was still there. So previous year, you can say 16, 17, 17, 18, 18, 19. If lapse time limit has lapsed, then these. But now if previous year 1920 ka time limit has also lapsed, but since he has the time limit for filing belated return and so on, then you cannot say. But here, if these 3 years ka return he has not filed, then you will make a TDS deduction basis this. Why they have chosen time lapsed period? Because obviously during the year you will not know whether he will file the return for which there is time or not. For the which the time has lapsed for those 3 consecutive years, if he has not filed his return, then TDS would be deducted like this. The rate here is not reduced. Because again, COVID impact was for those who were genuinely hit. But here you're making cash withdrawals and the main motive is to curb cash economy. So that's why here rate is not reduced. Any doubts up till now? Now, this here what you have to remember, students, a question which will come to you is like, here this particular amendment came So one thing you have to remember is that on withdrawals which were made before 1st July 2020, this 2% would not be attracted, even if it is more than 20 lakhs. But to count the limit of 1 crore or 20 lakh, that withdrawal would be counted, but TDS would not be attracted on it. Ma'am, example. So let's take this example on the screen. Suppose on 30th June, this person withdrew 22 lakhs. Okay. Then again on 3rd July, this person withdrew 5 lakh. Okay. Now on 3rd July, you will see obviously the limit is getting triggered. You will say yes. Why it is getting triggered? This person who has not filed his return for the years for which the time has lapsed for 3 consecutive years. Now, why it is getting triggered? Now, this came from 1st July. So you will argue that 1st July ke baad to abhi tak I have not withdrawn 20 lakhs rupees. But no, since you have not withdrawn after 1st July 20 lakhs rupees, that is fine. You will not deduct the TDS on the amount which you have withdrawn before 1st July, but we will consider it for calculating the limit of withdrawal. So here there is a withdrawal of 27 lakhs. What would you have done otherwise? You would have deducted TDS on 7 lakhs rupees. This you will not do. You would deduct the TDS on 5 lakhs rupees only, and that too at the rate of 2%. Then on 5th September, he withdrew 38 lakhs. Then on 10th October, he withdrew 37 lakhs. Now tell me, what is the total TDS? Try attempting it. Total TDS under section 194N. I have given you the hint of this difficult part. Try attempting it. What is the total TDS to be deducted under section 194N on this particular, this total transactions? Total withdrawal for the year is 1 crore 2 lakhs. Sumit, I'll answer your question. First, tell me the TDS amount now. Anyone, please try attempt. What would be the total TDS deducted during the year under section 194N by a particular bank on these transactions? If this person is a person who has not filed his return for 3 years. Sumit, why 1.5? I've told you there is no 197B here. Raman, no, 156 is not the correct answer. Good for you to attempt. Very good. Ambika, 1.6 is also not the correct answer. Raman, you have not included the TDS, I believe, on excess of 1 crore. Again, Sumit, you're applying 197B. I'm saying you know reduced rates are applied. 2% and 5% is the rate for 194N. Had it would be a reduced rate, I would have told. This is no reduced rate. Very good, Raman. Very, very good. 1,66,000 is the correct answer. See how. On a withdrawal over and above 1 crore, your 5% is attracted in this particular case. So here on 2 lakh, 5%, it would come as 10,000, right? This is one TDS. Now on withdrawal between 20 lakhs to 1 crore, which is your 80 lakh, but 22 lakhs was withdrawn before your 1st July. So that would be considered for calculating the total withdrawals, but on that TDS would not be attracted. So only on 5 lakhs plus 38 lakhs, plus you can say 35 lakhs. On 78 lakhs, I will deduct the TDS at the rate of 2%, which would be 156. So 156 plus this 10,000, total under 149N comes to 166,000. Is it clear now? This 78, you can either calculate on the amount on which it is getting triggered, 5 plus 38 plus 37, but 2 on that 2 lakh it is 5%. Or you can calculate that above 1 crore, it is how much? 5%. 20 lakhs to 80 lakhs, it is 2%. But this 20 lakhs, may say 22 was withdrawn before your 1st July. So instead of reducing 20 lakhs, you would reduce 22. So on 78, you are calculating 2%. So please be very careful on this type of question, because this is the year when this amendment came. That's why you need to remember 1st July as your date for those SSCs who have not filed the return. Is it clear now? And had this been a person who was a normal person who was continuously filing the return, so on this 1 crore 2 lakhs, you would have deducted at the rate of 2% on 2 lakhs, you have deducted 2%, which would have come 4,000. Had this been a normal person. Okay. Ambika, absolutely 80 lakhs needs to be taxed at 5%, but 80 lakhs were not withdrawn from July. Those 80 lakhs may say this 22 lakhs, not 80 lakhs may say, but out of that up to 1 crore, this 22 lakhs was withdrawn before 1st July. Withdrawn before 1st July. So I will ignore it for calculating my TDS amount. I will take it for calculating the total withdrawal amount, but I'll ignore it. Let me just give you another example. That's why before going on to further withdrawals, till here, I told you on 3rd July, they will deduct the TDS only on 5 lakh ka 2%, not on 7 lakh ka 2%, right? So 5 lakh pay here 2%, then 38 lakh pay be again I'll deduct 2% because abhi tak 1 crore has not crossed, and then 37 lakh pay be again I'll deduct 2%. So better is you make in these particular cases, better is you make a accumulated withdrawal ka bhi, total withdrawal ka bhi or aggregated withdrawal ka bhi column, so that you can have a further clarity. Here total withdrawal is 22. Here total withdrawal is 27. I'll rub it, sorry. Total withdrawal 22, here total withdrawal 27. Had this been after 1st July, say on 2nd July, then the moment it crossed 20 lakhs, you would deduct TDS on how much amount? 7 lakhs. But now the case is thoda sa particular. Why? Because you have to ignore the withdrawal for calculating the TDS, but take the withdrawal for calculating the limit. So now this withdrawal was on 30th June. Okay. So 30th June को 22 lakhs was withdrawal, 3rd July को 5 lakh withdrawal. Total withdrawal 27 lakh. Triggering of 194N, yes, very much, because the system took it on 1st July, number one. Okay. Triggering it, yes, because the withdrawal has crossed 20 lakhs. But the excess part would only be 5 lakhs, not 7 lakhs, because out of that excess 7, 2 lakhs out of 20 were withdrawn before this act came into picture. So when the act is not in picture, how can you deduct TDS on that, right? So you will not deduct the TDS on it. And please understand this concept, because there are further coming in TCS also, and in your 194O also, where you do not deduct the TDS, but you consider the amounts to check up the limit amount. I'll take one more example, don't worry. No, Suman, this is not a risk. I'm saying it, this amendment is from 1st July 2020. This section came in August 2019, but basically September 2019, so this was applicable. But for you people, this is the general case where you have to see if it's a general question of Mr. A who is just withdrawing it, then it is very simple. There is no 1st July. There is no 1st July. Then take the amount in excess of 1 crore and deduct TDS at 2%. Simple. But 1st July, say only for those people, again I'm repeating, who have not filed the return for 3 years and whose times have lapsed in the whose times have lapsed in the previous year in which you're making the withdrawal, then for those you have to see 20 lakhs ka limit. Or basically whose times have lapsed in the previous year in which immediately preceding the previous year in which the withdrawal is made. Only for those. So let me take you with another example of this July problem only. Okay. So on April, you withdrew 4 lakh. On May, you withdrew 7 lakh. On, or let's say 17 first. And then on August, you withdrew 20 lakh. And then again in November, you withdrew 55 lakhs. And December, 15 lakhs. This is 20, sorry. This is 20, this is 55, this is 15, this is 17, and this is 4 lakhs. Now tell me the total TDS amount. Try attempt it. Multiple bank accounts. See again, person who has to deduct will see the accounts which are maintained with him. What is the TDS? What is the cash withdrawal total? Multiple banks. You make withdrawal of 99 lakhs from one account, 99 lakhs from another. They will not deduct the TDS, or even 1 crore, as a matter of fact. And then in 194N is not applicable on deposit taking NBFC. First of all, it is NBFCs will not deduct the TDS. Only 3 banks, cooperative societies, cooperative banks, and your post office. I also did not calculate here. Let's try it. Here they will not deduct 20. Yes, here also TDS not be deducted. Let's see who solved first, me or you. Ambika says 2,13,000. Okay, good. Total TDS, not just 2% or 5%. Superb. Absolutely correct answer. Very good, Raman. Very good, Ambika. Absolutely correct answer. 2,13,000 is the correct answer. Very good, Preeti. Sumit, I am waiting for your answers. So I hope now it is clear, and taking this approach would be more clear, right? So now will you be able to attempt any question which comes? And if this is a normal person question who has filed his return, nothing problem, then on 11 lakh you will deduct at 2%. Simple. This is all withdrawals which are maintained with one bank. If I make it with separate banks, it does not matter. One bank and different accounts, this will trigger. Now is it clear? Should I tell how this came, or is it clear? On 11 lakh, 5%, and on 79 lakhs, 2%. 79 would be this 20, this 55, and 96 here, and plus 4 lakh more. So 79. Chalo, great. Next here for exceptions. Now, who would make a withdrawal but still bank will not, or the cooperative banks or the post office will not deduct the TDS? First, any payment made by government, banking companies, cooperative banks. Obviously, they need cash. So if they are withdrawing cash and TDS, if attracted, will make a problem. RBI will be just deducting the TDS all the time. Okay? Then post offices, any business segment of these banking companies, and white label ATM operators. White label ATM operators, basically there are many types of ATM operators, orange, brown, but white label are the ones which are maintained by the bank. Now, obviously, ATM operators have to withdraw the cash so that they can deposit the cash in the ATM machine for you to withdraw it, right? So, uh, white label ATM operators are also the exception to it. Then government by certain notifications also gave the exception to cash replacement agencies or franchisee agents of these white label ATM operators. Now, white label ATM operators. Now, there are agencies which are cash replenishment agencies. Now, what these agencies do, basically, they fulfill your requirement in the ATM of when the cash get replenished. Okay, so in those cases, they will fill in the cash. Now, obviously, they will make a withdrawal from some particular account, and then they will deposit it in the ATM's machine. So here they have made a particular condition that they should maintain a separate bank account from which they will make all such withdrawals, and the same should be notified, and then they would be exempt, or basically make as an exception that no TDS would be deducted from the withdrawals made by them, not the withdrawals which you make from ATM. We are not talking about them. We're talking about the persons who have to make cash withdrawals to meet our needs. Okay, then APMCs may, this is nowadays very much in talk. So APMCs are your agriculture produce market committee. Everywhere there are APMCs, and APMCs may, all these commissioned agent and traders are registered. Okay, or basically who operate under these APMCs. Now, obviously, what these traders and agents do, they purchase from the farmers, or they purchase from the person who's actually the cultivator. So obviously they will need to make them the payment in cash. So if they need to make the payment in cash, they need to withdraw the cash. I am a trader, I have to give it to the farmers, right? So to the farmers, their main motive is to receive in cash. Now, obviously, if I am a I'm a person who's operating in APMCs, and it's not that the trading happens in lakhs, the trading happens in crores and crores. So obviously I need my cash withdrawal not to be attracted in TDS, because I am withdrawing cash for meeting the genuine needs of the farmers. So that's why I have been covered under the exception that if I am a commission agent or a trader of an APMC, I can withdraw cash more than 1 crore with no liability for TDS to be deducted. But again, the same should be told, the PAN number of this same account should be given, that this is the account which I'll be using it, or I'll be operating it for APMC purpose. Okay, it's not that commission agent in their own welfare is withdrawing for their own personal purposes and getting rid of this TDS. Okay, so that they have to tell that this is particularly for so and so purpose, and that's when they would be given this exception. Clear? And last, which is again notified from this year, are your authorized dealers. Or full-fledged money changers, which are licensed by your RBI. Obviously, money changers again need cash to give. So for them also it has come as an exception. But again, separate bank account should be maintained where they will be changing the foreign currency of the non-residents and so on and so on. Okay, so these are your exceptions where on the withdrawals or the payments made by them would not attract 194N. Now back to your questions. Okay, so Sumit, if the bank would, if a person in general withdraw 1.2 crore from bank account in cash, now again, students, that withdrawal can be made from ATMs. That withdrawal can be made by issuing checks, by making a cash entry. Anything can happen. Okay, but he asked that whether the TDS will be deducted and then the net payment would be made, or the bank will pay net of TDS. So basically, what will happen? System will automatically make a debit. In general, this will happen. System will make a debit. You will get full 1 crore 20 lakhs, but they will make a debit, and then your account will go in debit balance. Obviously, they will see that it does not go negative because of these charges. that is the controlling which the banks and their ITs have to do. Okay. So again, you can say that NBFC bank account, say for tax planning, they can withdraw cash, but this can anytime be covered under this. NBFCs are not bank, number one. NBFCs are strictly not banking finance company, and cash withdrawal there by maintaining an account is not easy to say. Okay, I'll take one example for you, Priti. Any other doubt, Isme? Now, this is a very particular section, so no worries. Let's take an example of Miss Preeti only. Now, Miss Preeti withdraws. She has not filed a return, not you, Preeti. A person has not filed a return. And what happens? She withdraws the cash. Now, in June, or let's take simple example, then let's make it complicated. In August, she withdraw 25 lakhs. In September, she withdrew 55 lakhs. Okay, suppose 25 and 55 total coming to 80 lakhs. Total is 80 lakhs. So on this 80 lakhs pay, obviously the withdrawal is crossing 20 lakhs. So on this 60 lakhs pay, the TDS would be deducted at the rate of 2%. One TDS would be deducted here at 5 lakhs. Another TDS would be deducted at 55 lakhs. Clear, Preeti? Now, had this been the case of pre-July and post-July, suppose April May you withdrew 25 lakhs, September May you withdrew 55 lakhs. Okay, 25, 80 lakhs. Now, triggering would be attracted because the withdrawal is more than 20 lakhs, but it would not be on 60, it would be on this 55. 55 pay 2%. Clear? Any other doubt? Sure, great. So that's all about your 194N. It's an important section. Obviously, a question is expected specifically taking that July wala part. Next is my section 194O. This is again a new section, and this, please know, this is a new section which came into picture. 194N was already from before Finance Act 2020. Only thing they make an amendment for person not filing return and making a heavy withdrawal. Now this is section 194O, which we are talking about, is on certain payment made by e-commerce operator to e-commerce participants. Now, how should we take and understand this? Now, again, it's a new section. Yes, clarifications did came on 29 September, but you may have topics to deliberate. That's not an issue. But let's take it as a simple example. E-commerce operator is a person basically who operates a e-commerce platform where the person can either provide services or goods, and the person who participate on this to provide sale of goods or provisioning of services is the e-commerce participant. So now let's take an example of Zomato. I hope none of you feel hungry. So Zomato is a e-commerce operator. All of these restaurants are e-commerce participants, right? Now, how does, in general, what do your understanding goes? How does this operate? Yes, it is per financial year, Sumit. Okay, so how does this operate? Basically, Zomato is just a facilitator where e-commerce, there's a restaurant who has participated. Then whatever there has been a sale or purchase through Zomato, they will make the payment to this participant, right? They will make the payment to this participant. So now a TDS has been attracted on this payment. Whenever Zomato, the e-commerce operator, makes a payment to e-commerce participant, he will deduct the TDS at the time of credit or payment, which an e-commerce participant, obviously a resident e-commerce participant. Credit or payment, whichever is earlier. At what rate? At a rate of 1% on gross amount of such services. I'll explain you how. So if the bill, suppose e-commerce participant, there's a restaurant called Jubilant Company Limited, okay? So they made a sales through Zomato, and now Zomato will make a total of 5 lakh a sale was done. So Zomato, while making the payment to them, it will deduct the TDS at 1% on this 5 lakh and then will make the payment. But this section again, student, is effective from only and only 1st October 2020. This was introduced in the Finance Act, but got effective only from 1st October 2020. Now, obviously, keeping in mind the COVID impact, Section 197B gets hit here, and instead of 1%, 0.75% would be deducted from 1st October onwards. I will not write 14th May here because this came from 1st October only. Okay? Is this clear? Yes. Another thing which you have to remember here is the concept of deemed credit. But before I go to deemed credit, deducted is clear, deductee is clear, threshold, there is no such threshold, time of payment, time of deduction clear, rate of deduction clear. I hope everything is noted, right? Now, here's the concept of deemed credit. Deemed credit this says that deemed credit any payment which is made by the purchaser. Who would be the purchaser? The person who is ordering from that restaurant, ordering from Zomato for that restaurant, is making a direct payment, to such e-commerce participant, that would obviously facilitated by the e-commerce platform, that would be deemed to be the payment made by e-commerce operator to the e-commerce participant. Now, what does this mean? This is as simple that instead of making an online payment, you directly made a payment to the restaurant. So suppose in this 5 lakh which Zomato will give, Zomato has to give 5 lakhs to this restaurant, but also 50 or say 70,000 ka sale during the year which was facilitated through Zomato, but cash on delivery ki wajah se they received the direct amount. Okay? So they received the direct amount. So total deemed credit would be assumed to be the payment which has to be made plus the payment which has been made by the purchaser of the goods or the services directly to the e-commerce participant facilitated by this platform. That would also be included in the deemed credit, and on this 5,70,000, the 1% ka TDS would be deducted. Okay, clear? So any payment made by the person directly to the participant, if facilitated through the e-commerce platform, would be assumed that this is a credit of the e-commerce operator and he has to deduct the TDS on this also. Okay. So for understanding this, you really need to have an open image of how these platforms work. That's why you would be able to relate it in a much better way. Yes, even on 10 rupees, the TDS would be deducted. I'll come, Abhi. There are more pages to be unwound here. But now on the exception, on whom such deemed credit clear exception. Now on whom or such 194A would be 194O would be not applicable. If the e-commerce participant is an individual in HUF and the gross amount of services facilitated through that e-commerce operator, gross amount of such sales or provision of services facilitated through that e-commerce operator during the previous year does not exceed 5 lakhs. So for individual and HUF who are e-commerce participant, so like this restaurant is run by not a Jubilant company, but is run by Baba Ka Dhaba, no, I'll not take the example, by Mr. X, okay, who is running a small outlet of food. Mr. X is registered e-commerce participant on e-commerce operator. So till the time there is not a payment of more than, or the not provisioning of services or sale of goods of more than 5 lakh through that e-commerce platform, then the TDS would not be deducted. So simply to say, if the sale from that e-commerce platform for an individual and HUF only is of rupees 4,50,000, will the e-commerce operator deduct the TDS? No. If it is of 5,80,000, will the e-commerce operator deduct the TDS? Yes, on the whole amount. On the whole amount. Clear? What time the TDS will be deducted, Sumit? At the time of credit or payment, whichever is earlier. Zomato when makes the credit or whenever they're making the payment, then. For any assessee other than individual HUF, there is no limit. Because obviously something has to be introduced in the e-commerce world, because obviously everything, especially after COVID, has been on e-commerce platforms, right? Zomato, Myntra, your Urban Clap, your Yes Madam, and all these services are now, in fact, what not is an e-commerce operator. Anyone who is just acting as a facilitator for person to help them purchase it to their platform is an e-commerce operator. And anyone who is listed there is an e-commerce participant. Amazon has huge list of e-commerce participants. And obviously this individual and HUF should provide their PAN and Aadhaar. Then only they will not deduct the TDS. Step by step, understand it, it's interesting. But again, take an example in your mind to understand it. Also, if a TDS has to be deducted by e-commerce operator under any of the previous sections, then he will not deduct the TDS under this section. So no double TDS deduction would come, but otherwise 194.0 would be attracted. Clear? Chalo. After this, certain guidelines were, or certain clarification came very recently in September through circular number 17/2020. What these guidelines told? These guidelines told now stock exchange also is an e-commerce operator in a way, but they have clearly told any clearances which happens through recognized stock exchange, any settlements which happen through recognized stock exchange will, or any operator which is there in the IFSC will not attract 194.0 TDS deduction. Similarly, CERC is a Center Electric Regulatory Commission. On that, trading happens of energy saving certificates. So on that also, TDS would not be attracted. Okay. Now, what is coming in your mind would be a very common example. Let's take another example. Same example, mein Zomato. There is a restaurant, Domino's. Okay. Now, what is happening here is another operator is coming, Paytm. I ordered food on Zomato from Domino's, but I made a payment through Paytm. Now, Paytm is also an e-commerce operator for whom Zomato would be an e-commerce participant, right? What will happen? I will make a payment to Paytm. Paytm will make a payment to Zomato. Zomato will make a payment to Domino's. This is how it will happen, or maybe there is some direct interface that is separating, but accounts would be settled like this, right? Agree? Now, Paytm, the payment gateways basically, are also my e-commerce operators. So if I order from Zomato and make a payment through Paytm, so a question will come whether TDS would be doubly attracted, because this was a clarification which was demanded from the CBDT that Paytm will also deduct the TDS under 194.0 while making a payment to Zomato, and then Zomato will also deduct the TDS. So a clarification came when this scenario happens. When such scenario happens, only Zomato has to deduct the TDS under 194.0 while making a payment to Domino's, but Paytm will not deduct it. But at the same time, he has to ensure by taking an undertaking from the Zomato that the requisite TDS has been deducted by them while making the payment. Is it clear? So for payment gateways, it has come as a relief that they do not have to deduct the TDS if the other e-commerce operator is deducting the TDS while making the payment to e-commerce participant. Clear? Yes. Another clarification which came was for insurance agent. Now these are like Policy Bazaar. Policy Bazaar, again, it is an e-commerce operator, and on these, all these insurance companies are the participants, right? So in the first year of the insurance, what happens? Policy Bazaar makes deliberate efforts. The person calls, and so things happens, right? So Policy Bazaar, when making the payment to the insurance company, will deduct TDS under 194.0. But a clarification has come that in subsequent years where the insurance aggregator, this is an insurance aggregator, right? In subsequent years where the insurance aggregator has no such role, and only the transaction is basically happening between the insurance company and the insured person, then in the subsequent years, 194.0 would not be attracted. So I will read this also for you people to make it understand. These are really particular clarifications. And again, students, if you really want to understand it, connect with it. Okay. So now, insurance agent or insurance aggregator in many cases have no involvement in transactions between the insurance company and the buyer for subsequent years. Therefore, in subsequent years, the liability to deduct tax may arise on the insurance agents or insurance aggregators, even if the transactions have been completed directly with the insurance company. This may result in hardship for the insurance agent and aggregators. In order to remove difficulty, it is provided that in the years subsequent to the first year, if the insurance agent or the insurance aggregator has no involvement in the transaction between the insurance company and the buyer, he would not be liable to deduct TDS under 194(o) for those subsequent years. However, the insurance company shall be required to deduct tax on commission payment, if any, made to the insurance agent or insurance aggregator for those subsequent years under the relevant provisions of the Act. Clear? Customer will not deduct the TDS. TDS would be deducted would be the operator. Participant would be the person who is having the benefit from that platform and is able to reach to so many people. Amika, I did not get your question. Okay, and the last and the important point which you need to take care here is the 5 lakh ka threshold limit, which is applicable for individuals and HUF. Now, this is again, this section is applicable from 1st October 2020, right? Now, from 1st October 2020, again, why is this happening? Sorry. The limit has to be seen. 5 lakh is for whole financial year, but for trigger of TDS would happen, triggering would happen when the turnover crosses 5 lakhs, but TDS would be deducted only on amount or only on the services which are credited or paid after 1st October 2020. So, if I can say, suppose this restaurant made a services total of, in July, 3 lakhs, in September 1 lakh, in October 2 lakh. Okay? Now, here 3 lakh, total 4 lakh, total 6 lakhs. Triggering happened in October, yes, because now the turnover, the sale from that platform has crossed 5 lakhs, so TDS has to be deducted, correct? Now, TDS would only be deducted on the amount which happens to have after October. So not on this 6 lakhs you will deduct the TDS on this 2 lakh at 1%, or not 1%, 0.75%. Okay, you will take care of this. TDS would be deducted at 0.75%. Ambika, see, if there is an involvement on that insurance wala renewal, there is no involvement in the subsequent years, so there is no TDS. But obviously, if you're providing some other services like your customer relationship claims and so on, and that is aggregated to that through facilitated through that insurance aggregator, then obviously this would be attracted. Where there is no involvement, then 194 for insurance aggregators would not come. So, means for notified jurisdictional area, it is a flat 30% rate for TDS. Clear? So all of this in relation to 194.0 clear. So can I repeat now? And then if you have any doubt, we'll take it. 194.0 talks about payment made by e-commerce operator to e-commerce participant. So e-commerce operator will deduct the TDS on payments made to e-commerce participant. But if that e-commerce participant is an individual and HUA, then no TDS would be deducted if the services or the sale of goods or both during the previous year from that platform or through that operator is not exceeding 5 lakh, is not or does not exceed 5 lakh. Okay. Secondly, obviously, e-commerce participants are the resident e-commerce participant. The TDS would be deducted at the time of credit or payment, whichever is earlier, and would be deducted at the rate of 0.75%, not 1% for financial year 2021. Here, the concept of deemed credit would also become. Deemed credit means any payment directly made by purchaser to the e-commerce participant, but was facilitated through that operator would be considered as a payment made by operator to the participant for deducting the TDS. As per the clarifications which came, stock exchanges, CERC have been any transactions on them would not attract TDS deduction. Payment gateways would not deduct the TDS. If the e-commerce operator is deducting the TDS, they should take the undertakings. Insurance agents or aggregators will not deduct the TDS in the subsequent years where there is no involvement by them and just a mere payment made by a company insured person to the companies. 5 lakhs the limit obviously is the limit which will happen for the whole year, but TDS would be deducted only on the amount which happens after 1st October. So that's all about 194.0. Any doubts, students? Now, all of these sections which are in relation to TDS gets clear here. Now, again, I did it in the previous class, but I'll do it again, is your mandatory requirement for furnishing PAN. PAN has to be furnished by all persons who are the deductee from section 194, 192 to 195 also in fact for some cases, but till section 194.0. The rates, if you do not provide the PAN, the TDS would be deducted at the rate prescribed, which is your rates in that particular section, or 20%, whichever is higher. In case of 194.0, instead of 20%, 5% would be the higher limit. 5% would be the higher limit. Or one more thing, this PAN are required to be quoted in more the scenarios, which we will be doing now. But yes, non-residents are free from not providing the PAN. Non-residents are free from not providing the PAN if they are having incomes which are interest, royalty, fee for technical services, dividend, and transfer of capital assets. But they need to provide certain information in relation to their personal details like their email, contract, address, tax identification number there for which they are the resident, and so on the details, so that basically the country should know, the income tax authority should know that they are paying tax somewhere. They are not getting non-resident everywhere and getting the relief. Okay. So I hope all of these are clear. Now we come to your section 195. Section 195, my dear students, is a section which talks about payment to non-residents, or you can say other sum paid to non-resident. Obviously, 192 में non-residents are covered, 192A में non-residents are covered, your 194B and BB में non-residents are covered, 194E is of non-residents, 194LB, LC, LD are of non-resident, but except those sections, suppose any dividend is to be paid to non-resident, or any interest is to be paid which is not getting taxed there to non-resident, what will happen then? Or professional fees has to be paid to a non-resident, what will happen there? So non-resident, they both non-resident, non-corporate, or your foreign company. First of all, then the TDS would be attracted under 195. So deductor can be any person, a resident also, a non-resident also, but the deductee would be non-resident, number one. Number two, to attract payment in 195 students, it is one thing. Now you have to apply a non-resident concepts here. If the income is getting taxed in India, number one, then only you will deduct the TDS under 195. Now, when it would be taxed in India, when it is deemed accrued in India or received in India. Right? Then you will see section 9. Or, in fact, as per section 9, it may be a taxable income, but as per DTAA, it may not be a taxable income. So then you will take the benefit of DTAA. Then you will take the benefit of DTAA and make the payment. Number one. So first you have to see the taxability. Number two, for the rates also, you have to see what my income tax says and what my DTAA says. DTAA is the treaty which happens between the two countries, one the source and one the resident, where you get to know that as per that DTAA, maybe dividend is taxed in that country at 10%, but here dividend as per force is coming at 30%, for example, or 40% for a foreign company, non-resident. What will happen? Then you will deduct the TDS at 10%. If the by DTAA, that it is to be taxed in India at 10%, and rates in force are 40% for a foreign company, then you will deduct the TDS at the rate which is beneficial to this SE. Basically, at what it is being taxed, it would be 10%. Clear? So these things you need to take care in mind whenever you are doing section 195. It does not matter the non-resident has a P in India or does not have a P in India, has a business connection in India or not. When will you deduct the TDS? At the time of credit or payment, whichever is earlier. But if the non-resident thinks that this would, he has sufficient losses and unnecessary TDS deduction will attract unnecessary delay of or blocking of funds, so he can go to assessing officer. Assessing officer means he can make an application that assessing officer, there is no deduction of TDS. So because I have huge losses to set off my income, I have business losses to set off my professional income. So kindly please give me a certificate, so that he will issue a certificate that do not deduct the TDS of so-and-so person from so-and-so time. So he will give that certificate to deductee that take this certificate and please do not deduct my TDS. That's it, and they will not deduct the TDS. Clear? So non-resident 195 students, if I have to say in crux, to apply section 195, you should have the knowledge of taxability of that income, and obviously with simultaneously the impact which DTAA has on that income. In conclusion, whatever comes, then you deduct the TDS accordingly. Clear? Any doubt? And you know what? Interestingly, a deductor can, if he deduct TDS at a higher rate, generally the arrangements are non-resident says, I want my full money, you bear it, I do not care. Okay. And after that, you get to know as a deductor that you have deducted the TDS at a higher rate and you had to deduct the TDS at a lower rate. Suppose DTAA had a lower rate or it was not taxable at all and I deducted the TDS, then what will happen? You can go make an application to the assessing officer and they will give you a refund of that TDS. They will give you the refund of that TDS. So basically you can apply for refund if you have deducted the TDS at a higher rate for a non-resident, or than the rate which was there in DTAA, or the non-resident income was not taxable at all, and then also you deducted the TDS. Basically, you bought that TDS, and that's why you are claiming for refund. Clear? So this is a provision which is there specifically in 195. So up till 195, I hope it is clear. Okay. Now we move ahead. Any doubt? So that's all about your TDS deductions. Now let's come to other aspects of this TDS part. Next 15-20 minutes would be dedicated totally to it, how the things will happen. First, I told you deduction happens. Okay. Then deposit has to happen. Deposit happens by what time? By 7th of next month, or for the TDS which is deducted in the month of March, 30th April. In certain scenarios, students, in certain cases, in certain sections, for certain categories of assessees, they can make an appeal to the assessing officer. Appeal in the sense they can make a request to the assessing officer that we will not deduct the TDS monthly. Basically, we will not deposit the TDS monthly. We will deposit the TDS quarterly, and then assessing officer may ask them that, okay, deposit the TDS quarterly. But for other deductors, everyone has to deposit the TDS by so much particular timelines. Yes, the timelines have impacted due to COVID, but for you, you have to remember these timelines only. Quarterly payment of TDS or quarterly deposit of TDS, I should use the word payment basically, happens under 192, 194A, 194 H and 194D. Yes. Insurance commission, interest other than interest in securities, and salary. Otherwise, this is the timeline. Now deposit is also done. What will happen? Quarterly filing of return. This you deposit through challan. Now you have to file the return quarterly. File the return quarterly. So for April to June quarter, 31st July is the date. July to September quarter, 31st October. September to October to November quarter, October to December quarter, 31st Jan, which is now happening, and your Jan to March quarter, 31st May. Okay, clear? And here also, students, one certain exception for deposit, which we did in 194 IA, 194 IB, and 194 M, is that instead of 7th of the next month, they have to deposit it by 30th of the next month. Please remember this, 30 days from the month of deduction. Yes, deduction happens, then deposit happens, then quarterly return happens. Quarterly return ki forms you want to know? Gary, 1 second, system is really first. Quarterly return ki forms, iski form we did discuss, 26 QB, 26 QC, and 26 QD respectively. Okay. Here form goes for 192 deduction because 192 talks about all the salary details. So there is a separate form for that, which is form 24Q. For other deductions, there is form 26Q, and for non-resident deductee, it is 27Q. So where you deduct the TDS of non-resident or resident but not ordinary resident, you file 27Q. These are these forms. Do we need to remember it? It's better if you remember it. Clear? Then what happens after quarterly return? Is this everything over? No. After quarterly return, you need to issue the person the certificates that yes, I have filed a return, I have I have deposited the TDS, I have filed the requisite details with the department, you will get your credit. So that is an assurance basically given for the assessees that your TDS is now safely deposited under your name. So TDS are to be issued quarterly except for 192. For 192, the TDS is to be issued by 15th June, which is 15 days from the end of the return, because obviously salary details changes every month, maybe in particular cases. So that's why 192 ke 15 June, and for other, after every quarter ends, basically the time limit for every quarter filing of return for every quarter ends 15 days from then. 15 days from then. So 31st July, say 15 days by 15th August, then here by 15th November, for 15th February, and 15th June for the last quarter, you have to issue the certificates. So certificates are issued quarterly for other payments, but for TDS deduction on salary, certificate is issued only once with all the details of salary particulars perquisite separately in Form 12BA by 15th June. If they do not do it, the assessee would, the person, the deductor would be said to be assessee in default. किसी को कोई doubt? Okay. Now, in these timelines only, what will happen if you will not follow these timelines? What will happen if you will not follow these timelines? So first, if you will not make a deduction, so there is consequences of default. First, if there is no deduction or late deduction, then what will happen, students? TDS, so you have to deduct it, but there would be interest of 1% for month or part of the month from the date when the TDS had to be deducted till the time you have deducted the TDS. Now, what will you say? So suppose the TDS had to be deducted on 15th June 2020 and you deducted the TDS only on 19th October 2020. So 1% of the TDS amount per month. How many months? 15th June to 14th July, 1 month. 14th July to 15th July to 14th August, 2nd month. 15th August to 14th September, 3rd month. 15th September to October 14th, 4th month, and 5th month, because part of the month would also come. So for 5 months, you will pay the interest also now when you will deposit the TDS. Clear? This is on late or no deduction. Next is you deducted it, but you deposited it late. What will happen? 1.5%. You had the money, but you did not deposit it per month or part of the month from the date when the TDS is deducted till the time it is deposited. So from date of deduction till date of deposit. Actual deduction, yani whenever you have made an actual deduction, not supposed deduction, from actual deduction to date of deposit. 1.5% per month or part of the month. So suppose now this 19th October ko TDS which was deducted was only deposited on 31st December 2020. So from 19th October to 31st December, 1.5% interest has to be paid per month or part of the month. So how many months? 3 months. You will not say कि TDS deduct का तो 7th का timeline होता है, so 7 से no. From the date of actual deduction to the date of deposits, 3 months के case में you will deduct the TDS. Is it clear? Yes, TCS site calculated the traces site calculate as per +1 करके. No one understands it till date why. If you people know why, you may give it in the query section. Shall we do one question on this? Question on your screen, everyone, please. These late deduction and late deposit interest are calculated under section 2011A. 201 is for assessing default. 2011. 201A talks 2011A talks about your interest on late deduction and late deposit. An amount of 40,000 was paid to Mr. X on 1st July 2020 towards fee for professional services without deduction of tax at source. So supposed date was 1st July. But he did not deduct it. Subsequently, another payment of 50,000 was due to Mr. X on 28th February, from which tax at 7.5% amounting to 6,750 on the entire amount of 90,000 was deducted. So 1st July ke amount pe bhi TDS got deducted on 28th February. However, this tax was deposited only on 22nd June 2021. Compute the interest chargeable under this section. Now, let's start. Late deduction has happened of 40,000. K amount ke TDS. 40,000. Do not do it on the total amount, on the TDS amount. 40,000 pay 7.5% was the supposed TDS which had to be deducted. 3,000. Okay. How much is the delay? How many months? From 1st July to 28th Feb. Calculate the number of months. Total 8 months. I did not say it purposely. July, August, September, October, November, December, January, Feb. Total 28. Total 8 months. So 3,000 for 1% for 8 months comes to 240 rupees. This is my late deduction interest. Now, on what amount there has been a late deposit? On total of this 50,000 pay, he deducted 6,750, which was deposited on 22nd June. So 6,750 total, not 3,000 only. 6,750 total was late deposit into 1% into how many months? 28th Feb, say he deposited on, deduction happened on 28th Feb, he deposited on 22nd June. March, August, March, April, May, June. Total of 4 months. This comes to 6,750 into 1% into 4 months. Why I'm calculating at 1%? Late deduction है ना 1.5%. $405 plus 240 deductibility is the total interest under 201A. One is for late deduction and another is 2011A. One is for late deduction and another is for late deposit. Now, will you be able to calculate it? Good, Ambika. Now, one thing, students, remember there is a concept again and again which comes for a person to not to be an assessee in default if the deductee deposit the tax, file the returns, and a certificate has been issued for the same, right? Then the person is not treated as assessee in default. This we did a deliberate discussion also while we were doing our 40AI and 40AIA, right? So one thing, students, you have to remember is in that case, when a person files the return, that is the date which is said to be the date of deduction and deposit. The date when he files the return, that is the date which is said to be the date of deduction and deposit of tax. So basically, if there is not late deposit in this case, but there is definitely late deduction. There is definitely late deduction because deduction have to be made on a particular date. But here in such case scenarios where the other person who is the deductee has done all the cases, you take his filing return as the date of deduction. So in that case, 1% which is late deduction interest would come into picture, and would come basically from the date when you had to deduct the TDS till the date he has filed the return. Okay? Late deposit would not come into picture because deduction happens and at the same date the deposit happens as assumed, but late deduction would come into picture. That's why in 40AI or 40AIA, we used to disallow it in the year when deduction did not make, and in the subsequent year we used to allow it, right? So here also please take care of this point. This can be a MCQ for sure. Did you get this point? Any doubts up till now? Now we will take a break, but just 5 or 10 minutes of topic before we take a break. And last, deduction ka there is an interest, deposit ka there is interest, late deposit ka interest, late deduction ka interest. What about return filing? If you not file the return, then 200 per day as per 234E would be your fee for late filing of return. Would be your fee for late filing of return. 234E students. Okay. Another question, which is a theory question, which comes at whether Chief Commissioner of Income Tax can give you waiver on such interest, on such fees, or on such a late deduction, late deposit, or fees for a delayed filing of return. The answer is yes, but they can only give you such waiver when the cases are very particular. Suppose you were not allowed to make a deduction as per High Court judgment, but now as per Supreme Court retrospective judgment, you have to make a deduction. So in that case, obviously late deduction would attract, but it is because of a judgment, they may give you a waiver of interest. If there was search going on in your premises, and because of search your books of accounts were seized, you did not have the data to make deductions, and now late interest on delayed payment is happening, or interest of delayed deduction is happening, then you can make a application for them to make a waiver of such interest. Or if you had to make a deduction on some foreign or some payment to a foreign company or a non-resident, and the issue was in dispute, which was later on solved through mutual accepted procedures, on that now the TDS liability of deducting the tax is arising, then late deduction may be waived. So only on these particular cases, this is a theory question, the chief commissioner may allow you to allow you the waiver of interest amount of late deduction, deposit, and 234E ka fee. Please do not write 234E is interest. It is a fee which is there. Apart from that, students, which you need to take care of is just few last 10 minutes on TDS. Section 195 pe we closed on my TDS section. Now section 196 says 196 says that no TDS would be deducted on any payment made to central government, state government, RBIs, state statutory corporations, mutual funds under section 1023D. So on them, no TDS would be deducted if the income is accruing to them, or if it's the dividends or interest which are happening from the securities held by them. No TDS basically has to be deducted if the payments are made to them. Why? Because these are government only. Government ka hissa you will deduct and then you will deposit it to government. That's why to exclude the compliances, for the payment made to them will not attract TDS. This is not that central government will not deduct the TDS. They will if the scenario is, but their TDS will not be deducted. This is section 196, which has given such exception. Now we come to section 197. 197, students, is a section which gives a relaxation, you can say. Abhi, I told the same in case of NR also. 197 basically where you can go for lower deduction of TDS. Lower deduction of TDS. Now, how will this lower deduction of TDS happen? Suppose the TDS was supposed to be deducted at the rate of 10%. I request you to deduct it at 2%. How will this happen? It's not that arrangement between you and me. I will go to AO. I will show them all my income. I show them my losses and investments which I have to set off. And AO, if agree, will issue me a certificate under 197. That certificate will be in my name, in my PAN. So PAN is mandatory here also. Otherwise, certificate is invalid. Okay. So in my PAN, in my name, the certificate would be issued. And that certificate will say that deduct the TDS of so-and-so income on so-and-so rate. Then the deductor has to deduct the TDS on so-and-so rate only. No other rate would be acceptable. Clear? So this is how the procedure will happen, and that certificate would be impactful for only that much time, the time which the assessing officer writes. So suppose 3 years, 4 years, 1 year only, whatever assessment years they write, for that much time the certificate would be applicable. But you cannot go for all sections, but yes, you can go for maximum number of sections: 192, 193, 194, 4A, C, D, G, H, I, J, K, L, A, LBB, LBC, M, O, and 195. So you cannot go for 194N clearly because it's a cash withdrawal TDS section. So otherwise, majorly for all sections, you can go to the assessing officer for a lower certificate. But without going to assessing officer also, you can still have a chance for filing for getting the income without deducting the TDS. That is in section 197A, which talks about no deduction, in certain cases. So this basically works on a form which you have heard. 15G and 15H. Now these are self-declaration form. इसके लिए भी you need PAN numbers, otherwise this forms will be invalid. 15G is for other than senior citizens. 15H is for senior citizens. What happens in this? Why the separate forms? I'll tell you. If suppose I am a senior citizen, or I am a person having no income but only FD interest, and that too, the FD interest is 2 lakhs rupees. Now, if 2 lakhs per TDS would be deducted, I would be at loss and I have no other taxable income. So what happens? I go to bank and I give them a declaration that my income is lower than basic exemption limit. And when I say income, I say my gross total income, that is before claiming deductions. My GTI is less than basic exemption limit. Kindly do not deduct the TDS. So on the basis of that declaration and the PAN details, they will not deduct the TDS. And they will not deduct the TDS. And obviously, when I say that my GTI is less than basic exemption limit, that means the incomes for which I'm basically making such declarations are less than my basic exemption limit. But a senior citizen, why a separate form for them? Because for senior citizen, even if their gross total income is more than basic exemption limit, but their net total income, that is after deduction, is less than basic exemption limit, they can take this benefit. Or if they are paying no tax by claiming 87A, then also they can take this benefit. So for them, basically the idea is that no tax should be payable, and then net taxable income is less than basic exemption limit, then senior citizen can go for it. But for other, the gross total income should be less than basic exemption limit. And this certificate which you give them, this declaration which you give them, they have to file it with the commissioner within 7th of the next month. Clear? Yes? So nothing happens automatically. Government will also know that you are given 15G and 15H. And if you misuse it, then you are in scan. Obviously, you have done this in 1044 that no deduction of TDS will happen for any payment made to NPS trust also, and any payment made by offshore banking unit to non-resident of the interest would also not attract the TDS. So these are all the pelotra of exceptions which are covered in various sections which we have discussed. Any doubts, students? You can give your queries here. I will finish TDS, then I will take a good break. And TCS is comparatively smaller, but an important part, which we'll do. Okay, so now the last part. 196 clear, 197 clear, 197A clear. Yes, 197 may you go to AO, 197 may 7A may you give a self-declaration. Now, 198 simply says a thing which we are understanding from the first class, that tax deducted is equal to income. Basically, this section says that out of 100, 10 was deducted and 90 you receive. 90 is not your income. Total 100 is your income, basically 90 plus 10. But in case of 194N, tax deducted would not be your income because that is on cash withdrawal. That is not on incomes, it is on cash withdrawal. And in 192(1)A also, tax paid would not be your income. Why? Because you get an exemption under 1010CC. Clear? Yes. And 199 says that credit should be given. Credit should be given for the TDS which is deducted to the person, but also if not deducted but paid, just like in 192(1)A, if not deducted but paid, then also the TDS credit would be given. Clear? Any doubts? Please tell, guys. Last section, pakka, promise. 195A, income net of tax. Income net of tax meaning is that whenever the person for whom or on whom behalf you have to deduct the TDS and you are the one who is bearing it, then you will gross up the income. Then you will gross up the income. So basically, if the tax had to be deducted on 10,000 and after this, so you had to deduct 1,000 and you had to pay 9,000. So, but in a particular scenario, this happens. But in a very particular scenario, suppose in other scenarios this happen, in common scenario this happens. But if in a very particular scenario, the person says, I want full 10K. So 10K would be your, for your calculation purpose, would be your payment after the TDS deduction. Then you will gross up the income amount here by doing it 10 into 110, 100 by 110. And then you will calculate this amount. On that, you will show the TDS deducted. This is how it will happen. And whenever in this particular scenario of net of tax also, if you are bearing the tax, then also the other person will get the credit and it would be treated as income of the other person, and you will issue the certificate, you will file the return, and all such things will happen. Even if you are bearing it, even if you are bearing, that is not the arrangement between you and authority. It is the arrangement between you and the other person, that whosoever does so, he may refund you the tax. Whatever happens, that is totally your arrangement with that person, but he will get the credit of it. You have to issue the certificate, you have to follow all TDS compliances in relation to it. So a theory question can come: if a payment is made net of taxes, whether certificate should be issued? Yes, it would be issued, and you will quote all these section 198, 199, 203, all of these. Okay, so with this we complete our TDS. We did sections till 195. Then I told you about deduction, deposit, and your filing of return. Then we came to other sections. Obviously, we did consequences of defaults: no deductions, late deduction, late deposit, no filing of return, late filing of return. Then we came to 196, 197, 197A. Apart from that, we did 198, which is tax deducted is equal to income. 199 is that the other person will get the credit, and 195A says that even if that when you do net of tax, grossing up happens, and even if grossing up happens and you have borne it, then also the other person will get the credit, and the return has to be filed. The return has to be filed. The other person will get the credit. The certificate has to be issued. Clear? So this is all which you will find in some 20-25 pages of theory, which is there in your module after all these sections are done. Any doubt, particularly students? Clear? Yes? No? Do not think that sections are only important. Theory is also equally important for practical purposes also, and for the exam purposes also. So when we talk about 206A, railways are statutory corporation, it will attract. Okay, Sumit? Yeah. 206AA, now PAN is mandatory. If not, we have done it now for a number of times. Please remember, 5% is the higher limit in 194O. For 15G, 15H, you have to give the PAN number. For 197, you have to give the PAN number. If the PAN number is wrong, it would be said that it is not given, and non-resident has some certain exceptions in relation to it. To deduct the TDS, you need TAN number, except for 194 IA, IB, and M. Clear? TAN number is a common number for deducting TDS and TCS. So we'll take a break here. At 8:05, we will begin again, and we will begin with TCS. And by 9:05, 9:10, we will wrap up the class because it's very easy. So take a break, clear your mind of TDS, and TCS will start. It's a total opposite topic. Okay. We're live? Okay. So welcome back after the break. I hope you people refreshed yourself and got time to take and absorb TDS. Now we come to the totally opposite topic now. TDS, TCS. So what is TCS? Just to make you understand the basic difference between TDS, TCS first. Students, from now and in the next 1 hour, we'll be finishing TCS. So I'll request each one of you, if there's any particular TDS related question, please drop it by 995 so that I can answer it. Because then we'll be having a class after a period of 10 to 15 days. So just any question which you tried to solve and were not able to, or any particular query, you may please write in the query section. Okay. So now students, TDS and TCS may, what students get confused? I'll write it green wala with TDS. Okay. Yeah. So here the payer, while making the payment, deducted the TDS, right? So out of 100 minus 10, he used to pay 90. But for the pay, income was 100, credit was 10, right? So obviously deduct, who will be able to deduct? Who has to make the payment? He will deduct it from what he has to pay, right? That was the concept of TDS. Now we come to the concept of TCS. Now here what will happen, the person who has to pay, who will collect it? The person who had to collect money. Who is getting the money? Pay is getting the money, right? Pay is getting the money. So he will collect it. So now the payer will pay 100 plus 10 to the pay. For the payer, expense would be 100. Pay ke liye income would be 100 only. And here the payer will get the credit. Basically the buyer and seller you can take. But now it's not only restricted to buyer and seller. He will get the credit of 10 and he has to collect the TDS and he has to deposit the TDS in the credit of the collectee. So here, where out of 100 you had 90 and 10 was your credit, here you are paying 110 and you yourself are paying the tax amount to the collector who will collect the tax amount of yours and will deposit it under your credit. So yahan pe we used to talk about credit or payment, whichever is earlier. Here now you will hear a ulta term which would be debit or receipt, whichever is earlier. So unlike TDS from 192 to 195, here are only 5 sections, subsections of TCS under section 206C. 206C covers in fact everything in relation to TDS. There are 1 or 2 more sections in relation to that. So 206 mein there are various subsections. 5 of them cover when the TCS has to be collected. 2 of them, 2 new subsections have been added with effect from 1st October 2020. So I will request you all to have more of interest in here. Earlier TCS was 10 minutes topic. Now it's a 30 minutes topic to just summarize what these sections are. So this transition from TDS to TCS is a bit, what do you say, crazy, because obviously TDS mean you are talking about deduction. Now you'll be talking about collection. So having this image in mind would help you clear it, that who will get the credit, who will collect it, who is making the payment. Now students, unlike TDS may, what used to happen, there was no GST on which you had to deduct the TDS. So basically if the invoice was of 100, 18% was GST, 118. On TDS, 100 part where you used to deduct it. But here you collect the TDS on the GST part also. So here there is more blocking of fund because TCS is collected on the GST part also. Yes. So now let's begin with, so there are subsection 1, 1C, 1F, 1G and 1H. These are 5 subsections. How will you make it? Please write subsection. Please write collector, which would be in most of the cases the seller. Collectee would be the buyer. So now seller will collect it. So he will collect over and above the consideration. Please write it like this: rate, nature of the transaction, rate, nature of transaction, time, and other points. Now 206C talks about sale of certain goods. Sale of certain goods. Now what are the goods covered here? Alcoholic liquor, Tendu leaves. What are Tendu leaves? The one which are used in BD. Forest products, timber and forest products I should write. Scrap. Minerals you can write being coal, only coal, lignite and iron ore. Okay, so this is in 206C subsection 1, which talks about if there is sale of these goods, then seller will collect TCS at the rate of seller will collect the TCS at the rate of so and so from the buyer, Now, obviously, due to COVID times, to increase the cash in hand, these TCS rate were reduced by 25%. For TDS, you had 197B. For here, the provisions were initiated by section 206C में subsection 10A. So again, by 25%, 5% reduced by 25%, 3.75. 2.5 reduced, 1.875. 0.75%. 0.75%. But alcohol rate, students, was not reduced. It was 1% only, strictly. Alcohol rate was not reduced. Clear? Yes or no? Any doubt? Now please write who can be the seller and who can be the buyer. For each subsection, there are different seller and different buyers and different collector, collectee. So it's better to clearly write who can be the seller and who can be the buyer. Right, who can be the seller? So seller means the person who has to collect the tax. Now students think the person who has to collect the tax has to make all the compliances. Number 1, he has to have a TAN number. Number 2, he has to collect the tax and monthly deposit it, just like in case of TDS. Then filing of returns quarterly, then certificates issued. All of these things have to happen. Okay, so now Obviously, the compliances are there. So similarly, like your TDS, here also individual and HUF not having the turnover of 1 crore and 50 lakhs gross receipts are given relief. One second, miss. Yeah, so here also they are given relief. So any person will collect the TCS, he may be government, non-government, firm, companies, anyone will collect the TDS, but individual and HUF will only collect the TDS if their turnover in the preceding financial year is more than 1 crore or gross receipts is more than 50 lakhs in case of profession. Before this, it was written 44 AB limits, which was the same only, but now they have specifically mentioned the same thing from 1st October for individuals and HUF. Okay, so seller can be any person, and individual and HUF only when they have the requisite turnover. Now buyer. Buyer again can be any person, but not including, just like TDS was not deducted while making payment to central government and statutory governments, state government and statutory corporations. Here also, TCS will not be collected. TCS has to be collected from the buyer. TCS will not be collected from PSUs, from state government, from central government, from embassies, high commission, consultates, their trade representatives, and all of these are foreign countries. From them, TCS will not be collected. Another thing, buyer if purchasing for personal consumption. So that's why now you must be thinking that when you go and purchase liquor, you do not pay the TCS. You just pay the amount which is there on the bottle, right? So that's why, because you are taking it for personal consumption. So in that case, seller will not take the TCS. So you say, ma'am, now you're talking. Yes. So in case of personal consumption, the seller will not take the TCS. Clear? Next, another exception which is just here for your 206C is that if the buyer gives the declaration with his PAN number, if the buyer gives a declaration with his PAN number, that I am purchasing such goods for further production, or to use in power generation, then also TCS would not be collected. So can I give an example? If there is a brewery called United Brewery or United Beam Suntory, there is this company which manufactures liquor. Okay, so this person who runs a wine shop purchased liquor from them. So this brewery will collect TCS, right? Yes or no? But then when this wine shop further sells it to consumers like us, then TCS will not be collected, because for retail consumption, for personal consumption, TCS is not collected. Clear? Yes. But suppose United Beam Suntory is selling a liquor to a company called, what do you say? Dettol ka company is Baxin and Rexins, right? So say Dettol company, okay, is selling this alcohol to a Dettol company who will further use it for making sanitizers. Very much in demand, very common example. So then United Beam Suntory will not collect the TCS. Why? Because the alcohol is used for further production. So basically you can say when these are sold for further trading, then they will collect the TCS. Otherwise, TCS will not be collected for these specific products. Section 206C clear. TCS is to be collected at the time of credit, not credit, debit or receipt, whichever is earlier. Who will get the credit? The buyer will get the credit. He will pay more than what he has to pay, but he will get the credit. Guys, yes or no? Is this clear or not? Because step by step, we'll do each section and that's how it would be better. So TCS this year, a question is definitely expected because again, amendments are there, small things are there. Here also, PAN is mandatory. I remember one person had a favorite question on PAN, I think Padma Bhushan, right? So PAN is mandatory. Who has to give the PAN? Buyer has to give the PAN because he will get the credit, right? If he does not provide the PAN, the TCS would be collected. The TCS would be collected at double the rate or 5%, whichever is higher. So minimum 5% or double the rate, whichever is higher. So in this case, alcohol liquor में 5% pay, tendo leaves में 10%. If he does not provide it, timber forest में 5%, scrap pay 5%, minerals pay 5%. Clear? So if you will see any bill on which TCS is attracted, you know how it comes. That bill comes like value plus GST plus TCS. Total amount payable by the buyer. This is how the bill comes, and I've seen such bills. So all the questions answered in relation to TCS. Who is the collector? Who is the collectee? Who would be the seller? Who would be the buyer? What is the TCS rate? What is the time of deduction? Exceptions to the buyer details and time of collection, sorry. And if the PAN is not provided, what will happen? In each subsection which we'll be doing, you will be answering or tend to answer these questions only. Shall we move forward? Yes. Now, and this declaration which this person gives that I'll be using it for further production, kindly do not collect TCS. This has to be again, declaration has to have a PAN number and has to be filed with the commissioner by 7th of the next month. Just like our 197 acre declaration, similarly like that. Next is TCS on lease or license of parking, toll or mine or quarry. And mine and quarry mein, we talk about mine and quarry only of mine and quarry other than of petroleum gas and natural gas, petroleum, oil and natural gas. Okay, so now let's take an example to understand this. You go to a mall, right? Mall mein outer space, there is a huge parking. That person takes 20 rupees or 30 rupees or 40 rupees per hour from you for that parking, right? We are not talking about what he takes from you. That parking space he actually takes from the lease. That parking space he actually takes from the lease. So licensor is there or a lessor is there who gives that parking space on lease to such licensee or lessee. And similarly, the same thing happens in case of mining and quarries also. They give the license to mines. Same thing happens there also. Okay, so who will make the payment? The lessee will make the payment to lessor, right? So this lessor will collect TCS. This lessor will collect TCS at the rate of 2%, at the rate of 2% of the amount which is fixed of the contract amount. Okay, so as and when the payment is made, he will collect 2% of such amount. There is no threshold. direct 2% would be collected. So who would be the person who will collect? The person who has given his land on for parking or toll purpose or mining or quarry purpose. He will collect it from the person who has taken such land on the lease or the license. Okay, 2% is the rate, but keeping coronavirus times, it would be reduced and it would be 1.5%. Clear? Yes or no? When credit, no credit, debit or receipt, whichever is earlier. This transition happens, debit or receipt, whichever is earlier. So when he debits in his books of accounts or when he receives the payments or advance payments, TCS would be collected. No PAN number, again TCS would be collected at the rate of twice the amount, twice the rate, or 5%, whichever is higher. No, Akash, you will not take it by reduced rate. You will take it by double the original rates. This is also clear. Another interesting one which is coming up is your subsection. So subsection 1 talks about certain goods and that only have alcohol, that only has alcohol, tender leaves, forest products, scraps and minerals. Then we talked about licensor and lessor for a parking or a toll plaza under 1C, subsection 1C. Now we come to subsection 1F. Now this is an interesting one. 206C subsection 1F. This talks about collection of TCS on sale of motor vehicle exceeding 10 lakhs. Okay, so this is the section where you go and purchase a high or a luxury car or a high value car where the consideration for that car is more than 10 lakhs. So he will collect the TCS at 1% of such consideration, whatever is the consideration of that car. So consideration here, students, would be the ex-showroom price, excluding all that road tax and other taxes which happens, the ex-showroom price. So 1% of such consideration, 1% keeping in mind corona times, 0.75% from 14th May to 31st March. Didn't I mention it before? Yeah, 14th May to 31st March. And this is not as per 197B. This is as per your 206C10A. TCS के लिए they made it another subsection. TDS के लिए they made another section. Okay. Clear? So even if it's a second-hand car, but if it is more than 10 lakhs, you will pay for the TCS also along with the car price to the seller. Now, students here, they have a lots and lots of MCQs which need to be, not MCQs, FAQs, which were answered in relation to it, which I will discuss, and obviously the question must be popping in mind for you. So the first question will come, whether it's on excess or on the whole consideration. This is on the whole consideration. Second thing, it happens whether I purchase it. So there is manufacturer, and then there is dealer, and then there is you who purchase it, okay? Right? So a question will come here, who will collect the TCS? When the dealer, the showrooms which are there on the roadsides, they purchase it from the manufacturer, whether he will collect the TCS or whether he will collect the TCS. So the first answer is, the FAQ has made it clear that this TCS is on retail sale, So when you are buying it on wholesale, that is when the dealer is buying it from the manufacturer, no TCS would be attracted. No TCS would be attracted. It would be attracted when Mr. X goes, purchases a car of 11 lakh. 11 lakh pe he would pay 1% or 0.75%. Okay. So no TCS when there is a wholesale trading of wholesale purchase of cars, or basically no TCS would be collected by the manufacturer when he's selling it to the dealer. Number one. Number two question will come whether this consideration is per car, per invoice, or for the whole year. For the whole year, meaning thereby, suppose from one dealer, the same dealer, you purchased one car of 4 lakhs, another car of 5 lakhs, and another car of 3 lakhs. So 4 plus 5, 9 plus 3, 12. Three cars were purchased. So whether TCS would be attracted here? No. We are talking about each sale or each car sale or each invoice when it is more than 10 lakhs. We are not talking about the total sale from that particular authorized dealer. Here in this section, we're not talking about that. We are simply saying each sale from that particular uh, each sale of car if exceeding 10 lakhs would attract TCS. So if I purchase one car of 11 lakhs, he will collect the TCS. If I purchase another car of 4 lakhs, he will not collect the TCS there. Per car, per transaction, you have to see. Okay. Then another FAQ which was there is whether it is applicable for cash payment or check payment. So they have not written the mode of payment. They have written when the consideration is more than 10 lakhs. So even if the consideration is paid through cash, through check, through loan, also as a matter of fact, TCS would be collected. TCS would be collected. And who will get the credit of the TCS? The buyer. Here in this case, Mr. X. Okay. Now a question comes, who would be the seller in this case? The dealer. Who would be the buyer in this case? Who would be the buyer in this case? Any person who is buying, but they will not collect the TCS again from the seller is same person like your 206C subsection 1 which we discussed, any person, individual and HF only when they are having the preceding year turnovers of gross receipts. Okay. Now for the buyer. Buyer again can be any person except, so you will not select TCS when again you are selling it to central government, you are selling it to state government, you are selling it to embassies, because embassies purchases cars of high luxury only. You are selling it to local authority. Local authority is also an exception here. Local authority was not an exception there, but it is an exception here. You're selling it to high commissions. Then you're selling it to a public sector company, who is into the business of carrying passengers. So any company who's into business, and not any company, any public sector company who's into business of carrying passengers, if they purchases your motor vehicle, then you will not collect the TCS from them. Okay. Here the TCS would be collected at the time of receipt only. Not at the time of debit, but at the time of receipt only. Yes, so much it's an ex-showroom price. Again, it is a debatable one, but the understanding is clearly on ex-showroom. If PAN not provided, again, double the rate of 5%, whichever is higher. And one more thing, sorry, Akash, to answer your question again, the double rate would be the effective rate. Sorry, not the original rate, the effective rate. So if as per COVID, the reduced rates are effective, that would be the double rate. But again, to say, if you will go through the articles there again are opinionated view. But if I read the section particularly, it talks about the rates in force or 5%. The rate specified in subsection. So that's why. Any question from 206C 1F? Repeat after me. 206C subsection 1 talks about sale of certain goods which have alcohol, liquor, tender leaves, forest products, scraps, and mineral oils. Not mineral oils, minerals like coal, ignite, lignite. Okay. Then we talked about 1C, which is about parking lots, lessor, and lessees. Then we talked about 1F, which is on car, which is on sale of car, high value cars, which is of the value of more than 10 lakhs. So there was no such limit in 206C1 and 206C1C, but there is a limit in 1F. Clear? Now we come to another section on this is a new section and effective from 1st October and is again still a hot topic. So again, I would request anyone who has doubt, please write it in the query section. If no one has any other doubt, please focus on this section. Very, very, very important section, students. This section has two types of transactions covered here. One transaction is very simple. The seller of an overseas tour program package. That means now if whenever you're going on holidays, overseas tour program package, obviously you get yourself bookings for flights, for stays, for lodging, for other expenses. You get your booking for traveling, total booking you get from a travel agent, right? So that travel agent is nothing but a seller of an overseas tour program package. And this is overseas, that is when you take a tour program package for out of India, number one. Number two, who will take the person? The buyer would be the person who is actually going on vacations, right? Or going outside and has taken the package. He will collect the payment from you. Now on whatever payment, no threshold, number one, he will collect a TCS of 5% on such amount. 5% on such amount. Thanks, Akash. 5% on such amount. Okay? Clear? Simple? Obviously, if the government, again, the buyer here excluded are the central government, the state government, the high commissions, consulate, representatives, embassies, and all of them. Okay? The local authorities are also. But obviously, why will they take a overseas tour program package? This is as simple. So now, if you're going on a holiday, if you take a package of 5 lakhs rupees, you have to pay them 5.25 lakhs. Nonetheless, you will get 25,000 as credit. But now the government wants, because earlier the maximum of the black money, you can say, was actually spent like on these activities only. So now the government will have the idea of your expenses, and then they will obviously have an idea of your sources. Okay. This is clear? Simple. Now, another part in this 206C1G is tax collection by an authorized dealer. Now, please here, if you have a knowledge of FEMA, that will work. If you don't have a knowledge of FEMA, my limited knowledge of FEMA will help you understand this. Okay, so now an authorized dealer who receives an amount who receives an amount, who is an authorized dealer, first of all, any bank, generally as per FEMA, will be a bank who is allowed to deal in foreign currency for remittances abroad. Okay, who basically makes remittances abroad. You cannot make remittances abroad through other than authorized dealer as per FEMA. Okay, so an authorized dealer who receives in payment for remittances abroad under a scheme called LRS, Liberalized Remittance Scheme. Liberalized Remittance Scheme. What is a liberalized remittance scheme? First, I'll let you take there. Now, LRS actually is a scheme for resident individuals and HUF. Specifically, it's not HUF only resident individuals. So that means here it's this state clearly if the remittance is not as per LRS, or if the remittance is made by other than individual or HUF, or if the remittance is made by for the purpose of purchase of goods and services, TCS will not be collected. Here, LRS is basically a scheme under which, as per FEMA, every resident person has a ceiling limit of 250,000, has a ceiling limit of 250,000 USD, 250,000 USD or USD 250,000 to remit abroad without any permission of RBI. Without any permission of RBI. That remittance abroad can be for the purpose of making investments, for making gifts, for making donation, capital account, current account. List is there for studying, for medical treatments, for any purpose for personal nature, correct? And that is 250,000 per person, US dollar per person limit. So if it's a family of 4, there's 10 lakh US dollar limit for those family. Okay, so this is per person even for minor. So that means, so you should have an idea of this understanding that this section talks about only remittances which are covered under LRS through an authorized dealer. So now what will happen, students, when you have to make any remittance abroad? You will go to bank, you will give them Indian currency, so they will receive the payment. They will receive the payment and then they will remit abroad. Correct? Yes or no? Yes. So LRS mean limit is 250,000 US dollar, which you should know. For medical purpose, RBI has permitted another 250,000 for the person who's attending it. If you are giving it for education purpose, RBI says we can change the amount if the university has a higher limit. Okay. So you will go to bank with this amount and you will say, please remit the amount outside India. You will pay them in Indian currency. They will receive the amount. So the bank, if is receiving in excess of 7 lakh for remittance, if the remit amount is for more than 7 lakh, but other than for overseas tour program package. If it's for tour program package, flat 5%, the authorized dealer will take. The remittance is in excess of 7 lakh and is for other than overseas tour program or package, overseas tour program package, then he will collect 5% on the excess amount. 5% on the excess amount the TCS will be collected. I'll summarize it, don't worry. Another part, if you are making a remittance, from the source of a loan, which is deductible, the interest of which is deductible under 80E. Basically, you have taken a loan. This is very common. Suppose my son is studying abroad. Okay, I have taken a loan for higher education purpose for that son from the financial institution in India. Now I have to remit that amount, right? I have to remit that amount to the university. So in that case, I will make a remittance through authorized dealer. So if the source of remittance is the loan of 80E, then the authorized dealer will collect the TCS on 0.5% on for 5% in excess of 7 lakhs. In excess of 7 lakh. So these are the rates which are applicable to your remittances through authorized dealer or your purchase of 7 lakhs rupees. LRS I was explaining you, which was to tell that the limit, what is LRS, why liberalized remittance scheme is there. If you're not transferring it under the liberalized remittance scheme, then they will not collect the TCS. So sale and purchase does not come in liberalized remittance scheme. Or if you're not an individual, or then also they will not collect the TCS. These are only for the one who are into LRS. No COVID relief is there in this section. They will collect the TCS at the time of debit or receipt, whichever is earlier, for both of them. And if the overseas store program packager has collected the TCS, then authorized dealer will again not collect the TCS. So if I have given 10 lakh rupees to the overseas store program package seller, and out of those 3 lakh rupees is actually remitted to my foreign account for spending by the authorized dealer, then on that 3 lakh rupees, he will not collect the TCS. So now to 7 lakhs rupees, Sumit, okay? So now to summarize, there are simple things in 206C1G. 206C1G says that the seller, here, please focus first. The seller of the overseas store program package will collect TCS at the rate of 5% from the buyer. There is no threshold. He will collect the TCS at the time of debit or payment, whichever is earlier. Clear? Yes. Now, the authorized dealer for making the remittance under the LRS, when receives the payment for such remittances, will collect the TCS. One, if the amount is for overseas store program package, then he will collect full amount at 5%. Then he will collect TCS on the full amount at 5%. But if it is other than for the overseas store program package, like for medical purposes or for gifting or for donations or for studies, then there are different categories. Up to 7 lakh rupees, no TCS would be collected for remittance per financial year. Per financial year. So if the remittances have been made like 1 lakh in month of July, 2 lakh in month of August, 3 lakh in month of September, total, the moment it crosses 7 lakh, he will collect TCS on the excess amount. He will collect TCS on the excess amount. Then, if the remittances are of excess of 7 lakhs, he will collect TCS at 5%. But if the source of remittances is from a financial loan or a loan taken from financial institutions for education purpose, then the TCS would be collected at 0.5%. Okay. Now here, if the PAN is not provided, then double the rate of 5%. So here TCS would be collected at 10%. Here also 10%. But here, if PAN is not provided, then 5%. Whichever is higher. Clear? Please take a look. Again, here there is no minimum threshold, but here there is a threshold if it is for other than overseas store program package, which is of 7 lakh, and TCS only has to be collected on the excess amount, Please, each TCS section is easy but has each separate point. And buyer ka exception, obviously, foreign remittances made by central government, they are not individuals anyway, but they are otherwise also not covered. But for overseas program packages, also buyers may central government, state government, your embassies, high commission, consultates, trade representatives, local authorities are not covered. Moving on to the last section under TCS. Akash, it's inclusive of the GST invoice. TDS में GST is excluded for deduction, but TCS में they include the amount. Last, which is still a debatable section. And here also, students, if the buyer had to deduct TDS on some particular transaction as per some provision, then no TCS would be collected. So anyway, the point is the transaction should come into the knowledge of the income tax authority. Last is 206C1H. This is sale of goods exceeding 50 lakhs. Here it is only sale of goods, so sale of services are not included. So if any person sells to any person goods for a value of more than 50 lakhs and receives the consideration basically during the year for a value of more than 50 lakhs, he will collect TCS from that person. He will collect TCS from that person at the rate of amount, since threshold is very high, 0.1% on excess of 50 lakhs. Here also on excess amount, 0.1% on excess of 50 lakhs at the time of receipt only. So this section and 1F covers receipt only. Other three sections covered debit or receipt, whichever is earlier. So 0.1% on excess of 50 lakhs would be collected by the seller if he receives the consideration from a particular person for a value exceeding 50 lakhs for sale of goods, not for services. Again, because of coronavirus time, the rate has been reduced from 0.1% to 0.075%. But this section also, unlike my 1G, both of them are effective from 1st October, not unlike my 1G, both of them are effective from 1st October 2020. Both of them are effective from 1st October 2020. Now, who would be the buyer? Again, any person except central government, state government, your statutory authorities, your high commission, your local authority, not statutory authorities, your high commission, local authorities, consultants, embassies, all of these are excluded from buyers. But here also a person who import goods is also excluded. Okay. Okay. Who is the seller? Not every person would be the seller. Any person who has in the preceding financial year a turnover of more than 10 crores, then only he will collect the TCS. So both seller and buyer condition has to be met for collecting the TCS. So if the seller has a turnover more than 10 crores in the preceding financial year, then only he will collect this TCS on the the value exceeding 50 lakhs of sale of goods from a particular person. So here we are not talking about small transactions. We are talking about a single person having a transaction of 50 lakhs and more from a particular person. Now again, for this section, certain guidelines, certain clarifications came through circular number 17 only, which was there for 194.0. Again, students, please remember at the excess part only. Now we'll be going to discuss who is the seller, who is the buyer. Clear? Now we'll be going to discuss. First is the threshold amount. 50 lakhs ke excess pay is getting triggered. But since that 50 lakhs is the limit for the whole financial year, you will see the limit for the full financial year, but it is attracted only after 1st October 2020. So you have to see or you have to collect the TCS only on the excess amount which is happening after 1st October 2020. So for in your example, which was given in the press release also, suppose before 1st October 2020, a person has already received 1 crore rupees. Now, since it's a receipt basis, advance payments will also be covered. Okay, before 1st October, a person had already received 1 crore. Now, on 4th October, another transaction of 5 lakhs rupees happened. On what amount the TCS would be collected? It would be collected on 5 lakhs rupees only. It will not be collected on 55 lakhs, which is 1 crore. 5 lakhs minus 50. No, it will be collected on 5 lakhs only. Similarly, totally similarly to what we discussed in 194.0. Please take care of this. Okay. Again, students, I'm saying you again and again, please expect a question in this year exam from 194.0, 194N, M, not M particularly, N, O, 206C, 1G, and 206C, 1H. So if you have again any doubts, you can please ask on this. Specifically, they will check you on these triggering limits because the sections have come during the years. 1st October 2020 and the 194N on 1st July 2020, the amendment in that. Okay, clear? Yes. This 50 lakhs ka limit because is not applicable on sale of goods happening on recognized stock exchange or your Central Electricity Regulatory Commission ke exchanges pay. According to their rules, if they're happening, it would not be attracted. Number one, again, it will not be attracted on sale of petrol to non-resident airlines at airports in India. Sale of petrol to non-resident airlines at airports in India, it will not be attracted. Another thing, students, because this is on sale of goods, a clarification was asked that whether sales returns, discount, and all of these will have the impact. So it is clearly written, it's on the gross consideration, including GST, sales return, and all these discounts will not have to be taken into picture because this is on receipt of consideration. The moment you receive the consideration, you have to collect the TCS. Even if later you have issued a debit note or so on, does not matter. So again, yes, keeping the cash possibilities in mind, yes, it will relate to blockage of funds. You cannot just say that you will get the credit. Why are you sitting in worry? But it will even relate to reconciliations because so many reconciliations will have to make. You have to make GST reconciliations. You have to make TDS reconciliations. You have to make TCS reconciliation, and now sales only on the gross part, return part has to be included. Yes, the cumbersome procedure will come for the tax professionals, but this is how the section says. Expected some clarifications, some relaxations are there, but up till now, this is what the picture is. And the last part here, students, you have to remember, if no PAN or Aadhaar provided, then in that case, abhi tak what were we doing? Double the rate or 5%, whichever is higher. Here it is double the rate or 1%. So which would be 1% only, not 5%, because 5% on an amount exceeding 50 lakhs, maybe very more. Very good question, Akash. Since TCS is to be collected only when the seller receives more than 50 lakhs, what if he receives the financial year 2021 sale amount in 21-22? Shall we collect the TCS? Now, if this particular transaction talks about the collection of TCS at the time of receipt. So, in fact, one such clarification was also seek that suppose this is effective from 1st October. So, suppose for example, the sale happened before 1st October, the consideration has received after 1st October. So will the TCS would be collected? The clarification has come, yes, the TCS would be collected because this is on the receiving of the consideration. So whenever it is received, if after 1st October, it would be collected. So in your case, yes, Sumit, you can say to track high value transactions, this section came. So basically, government want to increase its net tax revenue through these means. Obviously, the transactions here would be much less as compared to the daily transactions covered under other provisions of TCS or TDS. But yes, there would be some good value transactions here. So to answer your question, if the sale is happening between 2021, no amount has been received, you will not collect TCS. The moment the amount is received after 1st October 2020, whether in this financial year, whether it prevails to previous financial year, whether it prevails to a period before 1st October, or whether it would be received in next year, then the TCS would be collected in next year. The moment the amount is received, so on the received, you will collect the TCS. But in this section, if no PAN is provided, the rate is 1%, the higher amount, not the 5%. Students, please remember. Now, another harmony which came through circular was between 206C1F and 206C1H. 1F talks about where you have made a consideration, sale consideration for the value of more than 10 lakhs of a motor vehicle, then you will collect the TCS. 1H says whenever there is a sale of more than 50 lakhs on the excess, you will collect the TCS. Now question comes whether both will be applied simultaneously. Obviously not. If 1F is applied, 1H would not apply. So if you have purchased a car of 70 lakhs, then you will apply 1F. 1F, not 1H. But suppose when can 1H be applied? When suppose I have purchased 10 different cars from you during a year of a value of less than 10 lakhs. Okay. But in accumulative, they are more than 50 lakhs during the year, right? So in that case, you will collect 206C with 1H ke andar TCS. So there you have to be very careful which section is hitting. If a particular section is hitting, which is specifically for car, then TCS would be collected in that section. Otherwise, TCS would be collected in 1H. This is what is the reference which I am talking about. So all the FAQs from my side, all the new amendments from my side, the buyer, seller separately have been covered. Just in case you people have any query, more than welcome. Okay, now some other few points. Here also TCS has to be deposited by 7th of the next month. here March के लिए भी the timeline is 7th of the next month. Their March के लिए timeline was 30th April. Here March के लिए timeline is 7th of the next month. Seventh and 30th April you have, here only 7th. Quarterly return by 31st of the next month goes, here quarterly return by 15th of the month immediately after the quarter goes. So there was 31st July, then there was 31st October, then there was 31st January, and then 31st of May. Here it is 15th July, 15th October, 15th January, and your 15th May. Here late deduction has 1% TCS and late deposit has 1.5% TCS. Here there is why I'm saying TCS, sorry. I was just focusing on some question. Here late deduction has 1% interest and late deposit has 1.5% interest. Here late deduction, late collection and late deposit both have 1%, sorry, 1% of interest per month or part of the month. So if I have collected the TCS late, then also 1%. If I have collected the TCS late and deposited it late, so 1%. So basically from the time it is collected to the time it is deposited would be 1%. Then here Form 27 EQ is there. Here you have various form 24Q, 26Q, 27Q, 26QB, QC, QD. Okay, here also certificate has to be issued by the 15th of the next quarter. What else is left here? You can make, just like in TDS, you can here also go to the AO to make the lower collection rate card certificate. If he is satisfied, he will issue a lower collection rate card certificate. But this happens very rare for TCS. Then intimation, which I did not deal both in TDS TCS. Your returns are basically just like processing happens in your income tax return. Processing here also happens in your TDS and TCS returns. Those returns are processed computerized, and intimation is issued regarding any arithmetical error which is there or regarding any incorrect claim which is there. It has to be issued by within 1 year from the end of the financial year in which the return has been filed. TAN number is compulsory for TDS and TCS. TDS mit is not there for 3 sections, 194 IA, IB and M. Achha, 197A में students, I did not tell you the sections. 197A has only limited sections in its scope, which I will tell you. उसके अलावा one more thing, students. Last thing of the class, and then 197A and any of your queries. Here, PAN quoting mechanism in TCS is mandatory on every voucher relations which happens. If the PAN is invalid, it would be said to be not given. If the PAN is not provided, twice the rate of 5%, except for 206C1H, which would be 1%, whichever is higher, the TCS would be collected. Then whatever certificate is granted for lower deduction, for that also you need PAN. Then for non-resident, here's an exception that non-resident who does not have the permanent establishment in India does not require PAN for TCS purpose or may not give the PAN for TCS purpose. There for TDS, non-resident only for 4 to 5 types of income has an exception. Here non-resident not having PAN with, because they do not have a P in India, would be an exception. Okay, then you cannot take double the rate and 5% or 1%. Okay, so with this we are good to go. Some questions which I would wish to answer or which is left, you can ask it again just in case it was got ignored. Okay, Akash. So if debit notes are issued, whether they would be eligible in sale amount eligible for collection of TCS, they will talk about the receipt. They will talk about the receipt amount. Whatever you are receiving it, on that they will collect the TCS. If the sale is basically you want to ask about the sale getting set off with debit notes, obviously there must have been receipts sometimes earlier. So on that receipt, they must have collected the TCS. Otherwise, on sales returns and discount, TCS is not collected. This is a very new section. Student will obviously come up with, because there is no case laws right now to support uh, different scenarios or different situations which will come. Again, clarifications are obviously written by so many stakeholders. With time and with usage of the section will obviously come into picture. Prima facie, whatever is the material for you to the maximum has been discussed, is what I can say. And yes, obviously some things may find may feel like adverse, that this is actually like, why are they collecting TCS on the GST amount also, they're not giving the benefit of sales return. But then also government has to find a way to smooth out the transaction. That's why they have put it on receipt directly, saying that you will get the credit. But yes, blockage of funds would happen. Okay, so with this, I would like to wrap, but 1 second first. Okay, someone asked me in the comment sections on YouTube, I guess, that how do we remember all these sections? We have company law sections, we have tax sections. How do we remember it? Students, there is no such thing as not remembering sections, because I'll tell you, if you are continuously in usage of it, if you're obviously no one, even the very expert does not remember each subsection and sections. But yes, with years of practice and years of usage, you obviously get to hold the maximum number of sections in mind. The one you practice will always be remembered by you. But now for the exam purpose, what you can do is, see, you cannot miss TDS sections, you cannot miss your PGBP sections, capital gain sections, your assessment procedure sections. All of these are really important. What I would suggest you is to write them down on a sheet of papers with chapter wise, and just stick it on some wall or some almira or somewhere, anywhere where you will go and visit it on a daily basis, and just go and look through it. Number one, this is how you will retain it. Number two, try relate it as much as you can. So when I was doing your TDS sections, I don't know how much time I said 40A, 40A, because I know that that is for the inadmissibility if TDS is not deducted. So that is how you will relate it. When I was doing salary 192, I discussed 40A5 or 1010CC. That's how I will remember it, that 1010CC is for non-monetary perquisite exemption. So that's a tax or non-monetary perquisite exemption. That is only the way you will remember it. No one gets to learn it in one go, but writing it, practicing it will help you. Okay. So 197 MA, it is not like 197 MA, you can go to AO for all these sections, but 197A, which is a self-declaration section, only 6 sections or 7 sections are there, which is 192A, 193, 194A, 194D, 194DA, I, and K. So seeing 192A, repeat after me, is withdrawal of accumulated balance of PF. 193, interest on securities. 194A, interest other than interest on securities. D, commission, insurance commission. DA, insurance withdrawal. I, rent, and K, units. Okay, so thanks a lot. And yeah, this one class which is skipped will be happening most likely on 25th January. You'll get a mail on it where we will discussing purely advanced tax, nothing in TDS, TCS, and interest of 234A, B, C, 234E. Okay, and it would be good that you will be having it after assessment procedures so that you can relate it better. Okay, thank you so much. I hope with the today's class was very technical. So many things covered up. I just hope there was a rhythm which was not disconnected. So wish you guys all the best. Thank you so much.